So, Daniel,
Good morning.
Yes. Good morning.
Excellent. Hey, Daniel.
Hey, George.
Oh, yeah, you can't see me. Sorry. Ooh, hadn't changed a bit, haven't
No,
There he
no.
is.
I'm getting, but
I? Yes,
that's
you
about
are.
it.
You might want to check that mic. It sounded pretty good.
Is it? Let me check. Mike.
A little
Yeah, that
low.
is.
I can hear it.
You can hear fine?
Yeah.
Okay.
So, Mark, is that some new art on your back wall there?
Just the new pirate thing that I got on Pirate Island. We were on Ocracoke, so
Oh,
they had this cool pirate thing, and I was like, "Oh, I gotta have that for my live streams."
Yes.
Can't have a pirate live stream on Fridays without a pirate, uh,
Yeah.
what do you call that? Glass
T-shirt.
mural in the background.
You need to have a T-shirt that says the the beatings will continue until the morale improves.
That's true. I do need one of those. You're right about that. I'll have to get on that for sure.
And there are no on the job injuries, only on the job deaths.
Oh God.
Perfect.
Great,
Why
Mike.
pay for someone continuously? Just pay for them once.
Lovely. All right. Uh,
Well, the
yeah,
the group
so
there's more and more people
let's
hopping
see,
on these calls. Good.
hmm
let's see if we got Aaron on yet. Let's see. Yes, we do. So good. And
yeah, hey, morning,
uh,
George.
yeah, so hey everybody. So what a beautiful day yesterday and today. Man, I hope everybody's had a beautiful day like we have in Columbia.
Yeah.
Good.
No, it rained in St. Augustine.
Oh.
Daniel, you went down there specifically to enjoy a
Yeah,
beautiful day. It rained.
yeah. Well, we did a evening tour that lasted 4.5 hours about the underbelly history of St. Augustine, not the normal history, and it rained profusely throughout the
Well,
evening.
speaking not of that, but speaking of history, I'm just alerting you that Ken Burns is producing his new series. I think it's 6 parts on the Revolutionary War. That's coming out in
Mm.
November, and I'm sort of interested in following that and seeing what he comes up with. It's not that he's doing a different slant, but he's just going to go into some areas that haven't had a lot of focus in other, though it's been written about all over the place. But I think he's got a handle on some different ways of looking at it. And is anyone familiar with a podcaster named Daryl Cooper?
Yes.
Okay. Very controversial guy, kind of looks at life and history from a different perspective. And he's got one coming out on World War II. So,
Yeah,
anyway,
but he never read a history book in his life. So don't believe anything that guy says about history. He's really dumb. Sorry,
well,
George.
that's totally
Ken,
bogus, Mark.
Ken Burns.
Okay.
Ken Burns is top notch. Is that coming out on PBS? He used to be on
Yes, it'll be
PBS.
on PBS. Yeah.
Oh, I gotta watch that then. Yeah.
Yeah.
No,
Yeah. I think it'll be
the
funny.
Revolutionary War is hard because like until I moved down here, I had no idea. Like no idea. Because when you're in New England, they just teach you, yeah, what was going on in the North.
That's
And
right.
it's the South won the Revolutionary War. The
Yeah.
North lost
It's
almost all their battles.
totally.
Yeah.
Yeah, it's very, very important part of that whole scene, that whole time. So anyway, just throwing it out there. So we've got our usual suspects on here for the morning market report. And why don't I just turn it over to Miss Patty and ask her
Okay.
to tell us what did the government shutdown impact the market at all?
It shot it up. Yeah. Okay. Well, I was going to talk about that later, but yeah, surprisingly, the government shutdown did not dampen the market at all. We've hit all-time highs in the Nasdaq and S&P and Dow all week. So let's see, the Dow is up in the past 5 days, almost 0.5%, 216 points. S&P is up 0.87%. It's at 67.75, which is incredible. Nasdaq is for the last 5 days was up 1.24%, 315, almost 16 points, and the Russell 1.8%. Yeah, it did better than the regular indices. Gold and silver are both up. Gold 1.76%. It about 40 minutes ago was at 38.91, and silver is up 1.2%. It really looked flat, but it was just up 57 cents for the week. And dollar continues to weaken. It's down to 97.82. That's about 50 cents lower than last week. The 10-year is
weakening.
Yeah, which is good, good for equities. The 10-year is down 4.092% this morning. Last Friday, remember, it was 4.158. And wow, crude really dropped almost $5 since last week, 60.73, because I think Saudi Arabia is threatening this weekend to add more barrels to the market, which is not needed.
So we're flush with fuel. Is that what you're saying?
Yeah, we're oversupplied. And, because of the government shutdown, we were supposed to have non-farm payrolls reported this morning for September, but we have no data. So that'll be interesting. What is the Fed going to do at its next meeting when we don't have regular economic reports coming out? That's all I got. Yeah. And the market is up again this morning.
Oh, yeah. So how's that Tesla doing?
Tesla, it was up more than $10 now, just 562. Tesla's doing awesome. And yesterday it did report deliveries, which were much higher than expected. I forget the number, but it was like a sell the news event. So Tesla went down about $20 yesterday.
Is that related to anything to the more buying of Teslas because that energy or that
tax credit going away?
Credit, yeah.
They do think that there is a pull forward effect for that. Yeah, people are trying to go ahead and buy the Tesla before it expires, I guess, December 31st.
It's you know how much that is? Is it 7,500?
7,500. I think it's 7,500. Well, if you're watching Tesla,
7,500.
Yeah, if you're watching Tesla, I think 360 is the 50-day moving average. So it'll probably stay above that, but that could be the bottom.
Is there any projection, any talking heads saying anything about what they think it'll reach by the end of the year?
600 is the highest I've heard recently.
I've heard the 500.
600.
Yeah,
that's what I said.
Yeah, and then somebody bumped it from 5 to 600. So anyway,
Wedbush.
Not financial advice, anybody, so don't get all excited about it. Just
Well, I was going to say that's Dan Ives' group, Wedbush, and they're always bullish on Tesla.
Okay, well there you go. All right, well thank you, Patty, and we'll turn it now. This is going to be a hard stop, so we're going to go. We're going to give Daniel the floor in a second. Let him talk and update us on a few things going on in his life that are not real personal. So, but we will have Aaron drop us a little bit of info on what's going on in that crypto market because I think Bitcoin's on the rise, isn't it?
Yeah, I mean it is Uptober, right? So that's what all the degens on Twitter or X are saying.
Uptober.
But Uptober, but I wouldn't be too excited yet. It is typically a bullish month. I think 8 out of the 10 past years it's closed in the green. So, and there's been a couple years it had or started some good trends throughout really November into December, those year-end runs. Um, so overall, I'm not too excited yet. Looking for that kind of a pullback. I do think dollar cost averaging throughout October will kind of set those entries for that year-end push with that momentum. You get the retail excited about holidays, market makers are setting their positions in October, and some of those institutions have those quarter four, funds that they're throwing in there. So typically that year-end, especially October, is good. Um, but yeah, I'm looking. I got a couple. I would say most of these are found on bigger centralized exchanges, but the three I'm really eyeing for this push are BNB, the Binance exchange
Yeah.
token, Solana, and Curve Finance, which are all, I think, set up from a technical analysis. If the macro, Bitcoin, Ethereum, if all that actually follows along, um, you should see some pretty decent rises in those. So kind of like your second tier alts outside of Bitcoin and Ethereum that have some potential. And just a note with Solana too, um, based on there is some heavy dilution, they do add to the supply. So the best way to really get your bang for your buck if you were holding Solana is to make sure you're staking it somewhere as well and make sure it's one of the reputable or you're familiar with that. There are a couple decent providers. I don't have a particular favorite, but if you want to get those staking rewards to kind of battle that dilution that happens too within Solana, it's a good idea.
So
But yeah, that's all I got.
can you give us kind of a quick picture of what staking looks like? Do you have to give up your coins? Do you?
It's essentially like if you own stocks and you kind of get a dividend. But I mean it varies to a certain degree based on the percentage, based on where you're staking, based on the total supply. But you're essentially locking away, giving custody somewhere else for those funds, but you're getting a percentage of interest gained on it as they own it. And it can be based on time duration or it can be based on, shorter duration. And typically the longer time that you stake it, you'll be, entitled to a higher percentage. But a lot of times it's kind of like a um, snake sales or snake oil salesman too. So you definitely have to be careful and do your research as well.
Got it. And there's no, is there a risk to losing your Solana if you were staking Solana, for
Yeah,
instance?
I mean, yeah, same thing with Bitcoin. When you had SPF and you had that FTX fallout and you had, all these funds where everybody, hey, this is a safe place they have custody, and now you lose them at that point in time. And then maybe you get them back or you get a percentage back too. So
Yeah,
definitely, if there's anything that's insured, for sure, if you can that's where I would look if I was staking something that they have up to a certain amount that's insured in any situation.
I think only a few of us on the call went through the Voyager, which was not quite as bad as FTX, but it was pretty dang haircut. Kelly's not on here, but Demetria, no,
Demetrio too, yeah.
yeah, Demetria went through it too.
Yeah, I
Uh,
went through it.
oh, there you are. Okay, yeah. So
Well,
there you go.
is staking like a covered call? So somebody can take it from you
So
if it
Patty,
gets to a
what
certain
happens is
price?
you pledge your coins to something that's called a validator. Sometimes they have different names, but a validator is essentially someone who votes on things that happen on the network, and they're paying you basically for your votes. So you're giving up your right to vote, and they're taking it and they're compensating it for you. So whatever protocol you look at, you can look at all the validators and you can see what their track record is and what they win and how much they win and sort of what their rate of return is. But they could fold up shop and you could lose your stake. I mean, it happens. So you have to be careful. But that's
Wow.
basically what it is, if that makes any
Yeah.
sense.
Yeah, Patrick makes a great point on that too, and I totally agree. And you'll see various other forms too with the collateral, with lending and borrowing as well, where they're using that, but they're also using, you're staking this, but they're going to give you a version of stable coin, back for it, and they're going to use those funds. So there's all kinds, but definitely do your own research for sure.
Yes, on that point, Coinbase, for example, I think they're providing something like 4.4% yield on USDC.
Yeah, that's a little bit different, right? Because they're
Yeah.
earning float. It has
Yep.
nothing to do with staking or validating.
No, but
Yeah.
it's just a way to earn some yield if you're looking for that as an alternative, let's say, to a bank deposit or something like that.
Yeah.
And that's better than a CD. Like a 3-month
is.
CD, it's challenging since they did that first rate cut to even get a 4.31%. That's amazing.
And you'll see, I would look into crypto.com too. Typically, they'll fluctuate based on the overall macro market. But during the last bull market, you could lock in a close to 10% USDC stablecoin return rate though too. And they're one of the ones that didn't have anything happen. But that's an absurd. If you have that set amount and you're willing to put it for 6 months as a stable coin and get that 10% return, and they can lock it in, which is it's interesting, but pay attention because those rates will definitely fluctuate during the bullish and bearish market trends.
And so what you don't know on some of those smaller folks that are offering those rates is you don't know their counterparty risk. All it takes is one counterparty on their end to blow up and they rug everybody.
Thank voice.
It's not FDI insured.
No.
Yeah.
No, not at all.
Those who are interested in earning a solid yield without staking, Kinesis Monetary System launched the third largest stablecoin in the industry, C1 USD. And if you send your cash into their platform, you'll earn a 7.5% APR, just putting it in the account, similar to how Coinbase does it. And it's also insured. It's the only stablecoin that is 100% insured. It's over collateralized. And they're coming out with multiple features this month, a bank account, Zelle. So it's basically this is called Kinesis.
Kenesis.
Kinesis. So they've been working on their exchange and their products since grinding since 2018. They've partnered with multiple multiple banks. They're basically like, once they launch all their products this month, I'm closing all my bank accounts and business accounts and only using them because it automatically converts dollars, and you choose an option to convert it to C1 USD. So now you're earning 7.5% interest. And then I can turn it into gold and silver instantly, or the other cryptocurrency assets that are on their exchange platform.
I've been on this page for 5 seconds, and this looks like super cool.
Yeah.
I've never heard of
100%.
this before.
They're the biggest company you never heard of. I've been saying for 2 years in the gold and silver industry that they're a 500-pound gorilla sleeping and about to wake up. They're doing a huge marketing push starting this quarter, and they're one of our sponsors for our TV show. They're the mission and vision of the CEO was to create a global sound money monetary system, and they're doing it.
Wow.
Debit cards, bank accounts for business and personal. You get a referrals yield for getting people into the system. And then by holding your gold and silver, you earn up to 5 different yields. And every month you get paid your yield in C1 USD and also your yield in gold and silver. The gold has the highest yield because people trade gold more on the platform than silver. But you can put your gold and silver in there and your dollars and earn yields every month.
So what's the
Sorry?
What is the risk? It sounds like it's almost too good to be true.
With the insurance, there really isn't a risk. I mean, the only risk would be the government cracking down like they did during Operation whatever with Biden. But they're audited by the oldest auditing firm in Europe, Bureau Veritas. It's like 60 years old. They audit their gold and silver and their 15 vaults twice a year, by the auditing company. I mean, their stablecoin right now, they only release 1.5 billion dollars worth of the stablecoin. It's backed with 15 billion, which makes it the third largest stablecoin in the market. I mean, they have been working hard, grinding behind the scenes to get this up and running, and it's finally coming out. I'll tell you, as not an investor, but somebody who's bought their cryptocurrency token that pays a yield in gold and silver. That's how they got started. It's a long time coming. A lot of the people who bought that have been waiting patiently for them to come out with partners that actually follow through. The biggest problem with them was the Biden administration, and then third-party partners who promised to bring out bank accounts, promised to bring out debit cards, but either went out of business or just stole their money and left. So they decided to do everything in-house, hire their own development team, start working their own contacts in the banking industry, and they're finally here.
Interesting. Well, that's definitely a little weekend research, folks.
Yeah.
Thanks for that.
Because there's no football as far as Gamecocks are concerned. So, but anyway, all right. So we have invited Daniel. Thank you for that, Daniel. But he also wants to talk about sound money and gold, and I'm going to give him the floor for pretty much the rest of the call until about 5 minutes before because I've got a couple of little updates, and we're just gonna roll. And it's like it's 10 minutes, so we got about 15, 20 minutes. So just fire away if you got a question for Daniel. But he is with Citizens for Sound Money. He's the executive director. He's founded a couple of other companies, a consultant, and he's also an advocate for financial literacy. And God knows we all need that.
Yeah, absolutely. Yeah, 70% of Americans need it. They're living paycheck to paycheck, and they need to learn about financial literacy and what money really is, right? So one of the things I'll start off by talking about why is gold and silver skyrocketing. First, I want to show some statistics. I want to share my screen quick. So these statistics are showing the supply of gold and silver since quarterly supply since 2010, and it's pretty steady, right? And all of a sudden, it pops off here and it skyrockets here. And if we look at demand really hasn't changed much either. So if we're talking about supply and demand issues, gold and silver shouldn't be popping off this way. Also, what will be interesting is the over the last 30 years, gold has overtaken the Dow Jones Industrial. I couldn't find the S&P chart, but year to date, this is a 30-year chart. If you just go to the 5-year chart, I mean, same thing. The gold has outperformed the S&P 500. In fact, gold has there's a group called North Star Bad Charts. They do technical analysis, and they created something called the CME, the market event. I forget what the CME stands for. Actually, let me look it up for you guys. North Star Bad Charts. Rotation event. There it is. Let me see. For what they have done is they looked at all the technical analysis and created this. This is the capital rotation event chart. When all these metrics, the U.S. money supply, the DXY, the CPI, PPI, currency in circulation versus gold, SPX, EW, the NYA, Dow Jones, Wilshire, Russell, when all these go to bear, and when the S&P 500 and NDX go bear market against gold, we see typically a once in a lifetime event, happens once every 40 to 50 years. It's called a capital rotation event, where liquidity comes out of the normal markets and gets pumped into gold, and we have a major recession. That happened in 1929. It happened in the 60s and 70s with the inflationary event, and it's happening now. So why is gold and silver? Let me stop sharing my screen here. Here it is. Stop share. Why is gold and silver going up when supply and demand are pretty much steady? It's because of the amount of currency that the central banks around the world are printing. Gold is shattering records, all-time highs. Silver is about to shatter its all-time high of near $50, and it's because of inflation. So yeah, there's of course other factors, but inflation is essentially defined as the printing and expansion of the currency supply. In gold and silver, it's not a company, it's just a metal that sits there and collects dust, as Warren Buffett says. But it has also been money for 5,000 years. Recent discoveries have shown that even in the Middle East, they found a pot with silver ingots, that dated back to 3,000 BC, or is it 3,000 BC or 3,000 years ago, which is 1,000 BC. So we have been using gold and silver for thousands of years, and this experiment where our currency is not backed by anything, it's failing. If you look at the charts between the Weimar Republic and every single country in the world right now, we are starting to see an exponential increase in the money supply because of quantitative easing, and the Genius Act isn't helping with that either. Now, before, when the Federal Reserve was created in 1912, the opponents pulled out full-page newspaper articles showing the Federal Reserve as an octopus with tentacles wrapping itself around every sector of government and the markets. And in the center, the octopus was vomiting currency into the stock market, signifying that all this new currency printing is going to go right into the stock market and increase the price to earnings ratio. And the Federal Reserve, under Ben Bernanke, when he was being interviewed by Ron Paul, admitted that the Great Depression was caused by the Federal Reserve, and every single boom and bust cycle is because of the Federal Reserve's power of printing and controlling the interest rates. As you lower interest rates, it becomes cheaper to borrow currency, which increases inflation. When you increase interest rates, it strengthens the dollar, brings the dollars back into the central banks and the banks, and it creates a deflationary event. It contracts the currency supply, contracts inflation. So we gold bugs, we prefer deflationary events because it means you're pulling currency out of circulation, strengthening the currency. Cutting interest rates is horrible for the entire economy because it artificially increases the price of all assets. Because in 2008, prior to 2008, the only government asset that the Federal Reserve could purchase was treasuries and treasuries. After 2008, when they nationalized Fannie Mae and Freddie Mac, now they had a second option on the menu to pump inflation directly with government-backed securities. Now with the Genius Act, now they have three options. They can just pump inflation directly into stable coins, and it's just going to get worse. Every single time, it seems like the whole Ponzi of printing currency into oblivion, it's coming to an end. They come out with a new solution on where to divert that currency, because cryptocurrency is not money. Cryptocurrency is an investment, and it's a derivative of all fiat currency. It's 100% based upon the capital injections of fiat. Gold and silver, on the other hand, is what you measure every other asset against. You take an ounce of gold and an ounce of silver, get the ratio of one share of, like, say, the stock, the Dow Jones, S&P 500, even options, derivatives, and so forth. And then you extrapolate it out as far as you can go, and you'll start seeing a trend of high to low ratios. When assets are on the high end of that ratio of gold and silver, you want to sell those assets, put it into gold, and wait for the correction. And then once that ratio gets, after the correction happens and the ratio gets to the historical low, you sell your gold and silver, and you put it into that asset, whether it's Bitcoin or whatever. That is called wealth cycling, because gold and silver is money. Everything else is credit or an investment. So why is gold and silver going up in value? It's an accounting. It's a metal that accounts for the total supply of currency in the system. The more currency there is, the higher gold and silver goes up. Supply and demand doesn't matter, as I showed you in the charts. It's not like we're out of gold. The gold inflation rate is on average, let's say 2% a year with all the mining. Same thing with silver. The demand is now higher because people are freaking out, but it's a lot more than that because, as you saw, demand really hasn't increased from the industrial side. It's more consumer based. So um, the reason why gold and silver is skyrocketing is because the dollar is failing. The DXY is not a measurement of the strength of the dollar against gold and silver. It's a measurement of a basket of other fiat currencies that are failing at the same rate. So when the dollar loses strength, it means that other fiat currencies are probably deflationary and the dollar is inflationary. When the dollar is strengthening, there's a deflationary event against other fiat currencies, not gold and silver. You take the currencies out, measure the dollar against gold and silver, the dollar's lost over 99% of its purchasing power. And according to Shadow Stats, real inflation as of last month is hovering around 11.3% per year compounded, not the 2.7% or whatever the government is telling you. The government has been manipulating CPI numbers since 1981. That's when they changed the CPI and the basket of goods, taking out higher inflationary products like New York strips, or taking and replacing it with chicken breasts or other things. They've changed CPI 9 times, and I read there are quotes on the reasons why. It's because of the government doesn't want to pay what they need to pay with cola and other things, to Social Security and other interest rates
Prevent the
for the
debt.
debt. Right, the debt. If the government has to pay 11% of the debt, we're going to collapse immediately. Can you imagine if the interest rates were that high? So our position at Citizens on Money is cryptocurrency is essentially, to us, better than the stock market because you have no you have if you're self custody, you have no third party risk, right? You have your own, you have your keys, you have your stocks. The stock market, on the other hand, you have no control over your money. It's all on the contracts. Something happens in the system, the broker dealers can just liquidate all your assets. Same thing with gold and silver ETFs. People ask, well, can I just put my money in the ETFs? Sure, but they're over leveraged between 1 to 200% to one. There isn't enough physical gold for delivery if you want to buy an ETF and then
Yeah.
say get it on and have it delivered.
Yeah.
It's over leveraged. There isn't enough gold and silver in the system. The derivative markets have increased the money supply. If the U.S. debt is 37 trillion, after you factor in just bank credit, depositing money, they lend it out and they put numbers in the bank account from their own computers that you still have currency in there, but it's not. They lent it out. When you factor in the amount of times they borrow out, it's over $200 trillion in circulation. Then you add derivatives from the derivative markets, it's probably another $200 to $300 trillion. We're over leveraged. There's not enough currency back in the financial system. And this is part of the reason why gold and silver is skyrocketing, because it is a perfect it's suppressed, right? The banks and institutions do short contracts, but overall, it's a perfect accounting measure of what is happening in the economy itself. So that's where I wanted to start. I think it's important that people understand how the monetary system works, how gold and silver works, before we jump into what we're doing as an organization. Paul?
Hey, Daniel, good to see you.
Likewise.
Few questions on Kinesis. Can you bring your own metals? If so,
Yes.
where do they warehouse them, and how do you know about the facility?
Yeah. So Kinesis has something called the EPD, exchange for physical to digital. So I have done several. So my full time job is executive director of Citizens on Money. I have launched a bullion business and we're growing. And I have an agreement, like as an official EPD partner for Kinesis. So somebody bought 8,800 ounces of Britannias, and I've shipped it to the vault in New York to turn it into electronic. So, or if it's a smaller quantity, you can ship it to me and I'll send the digital currency into your Kinesis account. So there's multiple options of turning physical into digital and earning a yield on your gold and silver. There's no vaulting fees with Kinesis either, because what Kinesis does that no other crypto exchange does, and anyone can correct me if I'm wrong, is that when crypto exchanges charges fees for trading on their platform, they keep 100% of those profits. Kinesis pays out to its user base 57.5% of all the transaction fees in the system. That's where they're coming up with those yields. So instead of keeping the 22 basis points for trading on their platform, they give that back to the community in different tranches depending on what you've done in the system. So there is no vaulting fee. Those fees cover the vaulting fees in the vaults that they use and for the system.
Anybody else?
Well, what about the BRICS and those countries
Good
hoarding
question.
gold?
Yeah, that's another reason why gold and silver skyrocketing. They're dumping the dollar. Those I think about maybe a year ago or so, I said at some point with the BRICS nations that they are going to dump the treasuries, dump the dollar, and where are those dollars going to end up? Well, they're going to end up back home. Those was it chickens are coming back home to roost. And that's exactly what's happening. So BRICS, America, for the first time, has dropped below 50% of the global reserve currencies. You know what? Surpassed Europe and is now number 2 as the